And we unpack some of the day's SENS results further. Motus has reported a stable first half performance amid challenging trading conditions. The group referred to its interim performance as a tale of two quarters. Earlier, I caught up with Group CEO Ockert, Janse van Rensburg, for an analysis of that performance.
Joining today, yes, it's actually been quite interesting, I suppose, if you start unpacking it. That subdued economic environment and activities we had, the period basically from July to call it mid-September was certainly telling.
Yeah.
And interesting enough, it wasn't just in South Africa. You had the same issue really in the UK as well, that it felt as if a few things were hanging in limbo. What happened or starting to happen in that second quarter was really that the interest rates started to turn. I think positive sentiment in South Africa was as a result of us all seeing that the GNU is working. You could see suddenly the inflation numbers started coming down, interest rates coming down. Not one item on its own was probably big enough, but the combination of all of them, including the two-part system, which probably had nothing to do with vehicle sales, but probably just got positive sentiment going. And that's why the second quarter was certainly a lot better for us than the first quarter. And we have seen that positive momentum has started to go into quarter three now as well.
Well, it's quite interesting because you talk about positive sentiment, and of course you've seen that filter through to the performance in the second quarter, and you're kind of seeing the momentum going into the third quarter. But how much positive momentum are you seeing? Because, I mean, as much as we have had interest rate cuts, that cycle is seeming a little bit shallow. I was actually at a briefing where a chief economist of one bank actually said that real interest rates are actually still quite elevated.
Yes, they certainly remain elevated, and I think we see where consumers were finding themselves maybe a year ago. Just one interest rate cut doesn't really, change the dial. But if you have a few 25 basis points, cumulative, it starts making a difference on that monthly installment. You must remember that most South Africans do require mobility to go to work every day. And, if you're in that replacement cycle, you're just looking for a little bit of a silver lining somewhere. So I believe that has certainly been part of it. So where people were maybe holding off a little bit, we do see there's still some pent-up demand in the market. And I think that's what they're looking for. As soon as there's a little bit of some positive news, people will actually go into that replacement cycle. Whether it's new or pre-owned, I think both of them are playing in that same way.
Yeah. And actually just looking at the state of the consumer right now, are there any significant consumer behavioral shifts that you have seen filtering through to your product mix?
Yeah, we've certainly seen over a number of years now that the consumers have all been trading down. I think, the days of the nice premium vehicles are probably a little bit over. As you can see, those numbers normally come down month by month.
Yeah.
You will always find that there is some portion of the market still playing there, and it's obviously wealth will remain for some. But the bigger portion of our population really need to play where they can feel comfortable, where they can afford it. And affordability certainly meant that most activity you currently find are sitting closer to the 200 to 300,000 range, maybe up to 500 if you really analyze it properly. But the reality is, people have been trading down, and it means that people are driving smaller vehicles, more entry level, and that is what we have seen taking place. And we believe it will still keep on, that consumer sentiment will continue.
Yeah, and in this kind of environment, really companies that do fight for market share. Just walk me through the kind of competitive landscape that you are seeing right now, and also just its impact on your margins and how you are working on responding to that.
So in our particular case, we sell all the brands. So we sell 1 out of 5 new vehicles in South Africa. So we do need to make sure that we, stay abreast of where the market is turning towards. So we obviously try and back a lot of the new entrants into the market as well. We have more recently now also got 12 of these new entrants from the Chinese that we've got as brands as well. But we still have a big market share from our own importer brands, which is Hyundai, Kia, Renault, and Mitsubishi. Where we have seen the market behaviors also change almost to a positive is that we have seen the used vehicle market still remaining buoyant, and there you you are able to actually ease out a little bit more on the margin side there as well, maybe more than what you were able to a few years ago. So the reality is you have to play in all sides of of the equation. I think what is important for us and why we remain resilient and believe that going forward is still in place for us is that we've also been able to diversify quite aggressively into the non-vehicle space. So as much as the vehicle space is good for us, our non-vehicle operating profit, in fact, was 54% of our overall result for the 6 months.
Okay.
So certainly making sure that we are also covering the aftermarket parts, the mobility solutions, and the car rental side.
That was Ockert Janse van Rensburg, CEO of Motus.